Well, a very, very slow day today. We had Powell testifying in front of Congress, and the markets were going basically sideways. Took 2 trades. We're going to go and recap those right now. These are done in my 20, 50K Apex funded accounts. Right now, it's 80% off with code TBM. So if you're interested, you can get started. You can get funded up to 20 accounts. Let's go and dive into today's recap. Yo, good morning. We're back. Feels like Monday, even though it's Tuesday. Forgot that, I didn't forget. Found out I had a ultrasound yesterday for our 3rd baby. I wanted to go to. It was like the 3D one, which is always super cool. If you haven't heard about that, but yeah, that's why there was no stream yesterday, and there was no stream on Friday because of golf. So first stream in a couple days. We're back. Yeah, all good. Baby super looks very healthy, in like the 30th percentile, 38th percentile of stuff, which is great. You know, saw like the 3D face thing is crazy, but she looks just like my other girls did at the 3D face. So that's exciting. Monday's President's Day. Next Monday, yeah, bank holiday, right? Alrighty, so let's see, what did we do? Friday looks like we slapped a little bit. Yesterday it looks like we pumped a little bit. All in all, though, I mean, we're in the very, very similar area that we've been in for a while now, honestly. Got a couple of big blocks on the books right now. Haven't seen this in a while, actually. 650 and 725. Let's see. So 217 at 725, and then looks like 650's got some ties down there also. News-wise on the session, what do we got? Oh, we got Powell testifying at 9 o'clock. We got a testification going on. I wonder if that is scripted or Q&A. Does anybody know? Markets are open. Does anybody know if it's scripted or a Q&A? It's both. Scripted does nothing usually. The Q&A does a lot. That's what I typically say. So that'll be interesting. We got VWAP at 750. Overnight lows down at 65 or so, with that block being at 650. We got VWAP in yesterday's IBL at 750. Going up higher, we've got value area low from yesterday and the overnight highs, which is right where we rejected. The overnight session was right at yesterday's value area low, around 835 or so. We got yesterday's close at 845, and then yesterday's point of control at 865. So if we can get through VWAP, in my opinion, the rotation to 800 looks pretty clean. And then if we can get through 800, the rotation up through 835, 840, 850, 830 to 850 really looks pretty clean. If we're going to be in an uppies kind of move, we'll see, of course. If we reject VWAP, and we have a pretty clean rejection off of it, or the magical 20s or whatever. But if we cannot get above VWAP, watching for the overnight lows and the block of 650 is also pretty interesting. So yeah, we'll see what happens. And as always, I'm gonna wait the first 15 minutes to trade because that's just what I do. If we get lit, I've got dad jokes from the weekend and Monday and today. I got 3 dad jokes for you if we can get lit before 9 o'clock. We need 420 thumbs up before 9 o'clock, and I'll read out 3 dad jokes. Apex accounts are 80% off right now, chat. 80% off until the 19th or something like that, I believe. You can use code TBM for 80% off. It's 1 day to pass. All the accounts are 80% off. You get funded up to 20 accounts. I'm trading 20 of the 50K funded Apex accounts. Retested the prior open there at 90. Pushing through. Maybe gonna try and run the highs. We'll see. Yeah, I think my whoop is off. I do not have a 130 right now. Yeah, I don't have that at all. Yeah, my whoop says I'm at a 73. So. All right, do we run the VWAP block now at 750? Ran the block at 800. Go run the 275 block at 750. Possible. All right, here we go. That would probably be the statement release coming through, because he has still not even started talking yet that I see. Powell, we do not need to be in a hurry to adjust policy. Powell, we can ease policy if the labor market unexpectedly weakens or inflation falls more quickly than expected. Powell, we can maintain policy restraint for longer if the economy remains strong and inflation does not move toward 2%. Those are a couple of news items.
Good morning. This committee will come to order.
And we
Chair
are,
Powell, thank you for being with us today. I appreciate your willingness to have a chat with us about some of the really important issues facing our country. Just 2 years ago, we saw the failure of Silicon Valley Bank. SVB marked the third largest bank failure in U.S. history and the largest since the 2008 financial crisis, and yet not a single federal regulator was held to account. In fact, the FDIC filed a lawsuit against bank executives which accused the SVB of egregious mismanagement, and I agree. How is it that no bank supervisor has faced any consequences? With 30 MRAs and MRIAs that never had timely action at SVB. How can the people who are supposed to be our cops on the beat, and in March, just 2 years ago, we saw the failure of Silicon Valley Bank face
How are we still talking about this?
recourse for such egregious failures? I simply don't understand. We must all address the fact that over the last 4 years, the Biden administration and Bidenomics have devastated, decimated, and destroyed hardworking families' ability to support themselves. During Joe Biden's time in office, overall prices rose by over 20%. Energy prices, 34%. Transportation costs, 31%. Groceries, 22%. But that's not all. Thanks to Bidenomics, 2/3 of Americans have less than $1,000 in their savings accounts. Things are going to get better. During his first term, President Trump kept his promises to the American people. In the first 3 years of his presidency, President Trump built the most inclusive economy ever. 7 million jobs created, and 2/3 went to women, African Americans, and Hispanics. It's time to once again make America's economy work for the folks working paycheck to paycheck. Joe Biden broke our economy, and Donald Trump will fix it. We are seeing an unfair playing field that results in disastrous consequences for legal businesses and law-abiding citizens. On one hand, if you were in the private sector and you do your job poorly, you would face consequences, reprimands, suspensions, or even being fired. But if you are within the walls of the federal government, such as a bank regulator, you will face no consequences for your actions. Chairman Powell, I look forward to hearing from you on the Federal Reserve's future and the plans that you have for right-sizing the financial regulatory framework, specifically around Basel III.
Now, Co-President Musk and his OMB director have frozen all work at the Consumer Financial Protection Bureau. There are now 0 cops overseeing the $18 trillion consumer lending market. 0 cops. If Musk and his OMB director succeed in killing the CFPB, it's like putting a sign on every checking account, every credit card, every mortgage application, and every car loan. Cops have been fired. Let the scams begin.
To those asking how long this is or why we're watching it, it's because Powell's going to be talking. They're talking to Powell right now. They just have to get their politicalness out of the way. Powell has the potential to, make statements or whatever that will boost or crush the markets in a split second. We've seen it. Basically, every time that these things happen, there's somewhat of a reaction. They typically last, it starts at 9. It'll typically last till 11 or so. I won't be streaming that entire time, obviously, but it happens 2 times a year for the Congress, I believe, 2 times a year for the Senate, if I remember correctly. And it is unfortunate. It does affect the markets, which is why we're watching it. It is annoying to listen to politicalness, have a good laugh out of it, but it does affect what we're doing, which is why we have to watch it. Okay.
It's now clear that the Fed acted too late and let inflation get too high, and then responded by keeping rates too high for too long. These policies made the big drivers of inflation, like housing costs, even worse. And they put Americans' jobs at risk, making it more difficult for them to afford a home and for small businesses to be able to finance their operations. I urge you to move more rapidly to bring down interest rates, beginning with a meaningful rate cut next month. Sure, Donald Trump may be happier with you right now, but wading deeper into politics to please him over the long run will burn the reputation and the independence of the Fed and put our entire economy at risk. I urge you, don't fall into these traps.
Paul,
What color tie?
Congress.
Purple's
Mr.
up.
Powell, thank you for your testimony today, and you are now recognized.
Chairman Scott, Ranking Member Warren, and to present the Federal Reserve's other
All right.
members of the committee.
Uppies.
I appreciate the opportunity. The Federal Reserve remains squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people.
As a guy who's spent a lot of time in the private sector, 15 years running a few businesses, I can tell you that accountability is a necessary part of making the entire organization healthier and perform its job as well as possible. I'm encouraged that the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan, all of which would be expected in the private sector, as I just mentioned, for employee
Imagine putting
failure.
a government employee on a PIP.
Please explain to me why Fed employees are held to a different standard from my perspective than everyone else, and what are you planning to do to take accountability for Fed failures in supervision?
There we go.
We've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many, many things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people were carrying out a specific playbook that failed
bit of a ligament here
to
at the highs,
cause us to
honestly.
act in time for these things. So it wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was,
I'm
I
gonna
would
take a
say,
little short here.
a lot of focus on process,
We run highs, I'm
governance
out.
and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So, as we discussed yesterday, we took very substantial steps
down, break
to
even.
avoid further spread of those
Ran up
issues,
7
and
points.
that was successful. But I understand your point on accountability.
This is one of the areas where you see the
The idea here is that we're at the top of the range. It's a cheap trade. We have been ranging. A little bit of a trend to the upside, barely. Delta showing a little bit of weakness here at the highs, which is why I wanted to take a short. Ran 7 points, thought I was going to get the full fill. Moved to break even just to take risk off. Ends up running it. I'm up $10 on the break even stop, but just kind of looking for like a rotation back into the chop zone here. That's basically the idea of the play there.
For any Americans who have money deposited at JP Morgan or Wells Fargo or any other of the giant banks, they should now know that there is no one on the job to make sure that those banks are not scamming you. Only the smaller banks now have a cop on the beat to make sure that they aren't cheating consumers. You know, if I have my money in one of those giant banks, I might think about going to a smaller bank where the protection, at least right now, is a whole lot better. Now, at the same time that the CFPB is under attack, the Fed is buckling to pressure from Wall Street to erase other safeguards for the too big to fail banks. During the first Trump administration, under your
820 retest
leadership,
is kind of interesting.
the Fed weakened the big bank stress tests, including
IB is
giving
set
the
also.
big banks some of the answers
Initial
to the
balance is
test
set.
in advance. I called you out on it, but you promised right here in this committee that you would not give those banks the whole answer key. I'm going to quote you back. You said, complete knowledge of the models could lead to a model monoculture in which all firms have similar internal stress testing models, which could increase the correlation of risk in the system and miss key idiosyncratic risks faced by the firms. I agreed with you. But several weeks ago, the Fed announced that it has plans to do exactly that, hand all of the answers over to the giant banks. Chair Powell, why is the Fed about to propose a rule that directly contradicts your own testimony and, in your own words, would render the stress tests toothless?
Senator, in essence, because the ground has shifted very substantially in administrative law, and we actually want the stress test to remain resilient to that. And so we're making changes to accomplish that.
Well, the changes are changes you've identified earlier as making those tests toothless. Look, the big banks are going to juice shareholder payouts and leave this economy more vulnerable to a crash. The Fed is knuckling under to bank lobbyists. We know how this ends. People will suffer. Wall Street will get bailed out. I urge you, Chair Powell, to serve Main Street instead of Wall Street. Don't weaken these rules.
I've got a series of questions, but I would like to give you an opportunity, if you would like. The suggestion that the ranking member has made here is that the big banks can now scam individuals right now. Any change in the laws regarding how they're supposed to be treating the individual consumers out there or anything along that line?
Law changes? No, I'm not aware of any
Any
law
changes, any rules that they would have to follow?
Not that I'm aware of.
Are they still audited, and do they still have the regulators in watching all of their businesses just as they did before?
Well, they'd have all the regulators except for the CFPB.
Very good.
If in fact, in the hypothetical, the CFPB weren't carrying that out.
Anything else you'd like to add before we move on?
No, I'm good. Thank you.
Thank you, Mr. Chairman. As we continue to prioritize the stability and the resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. Now, I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III Endgame rulemaking process?
I'd be glad to. So we remain committed to completing Basel III Endgame. We think it's good for U.S. banks, it's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC, and that seems to be happening. And when that happens, we're going to sit down with them and work our way through to a Basel III Endgame proposal. And I think we can do this reasonably quickly, one that is compliant.
Yeah, that
consistent with
820
the Basel
test would be kind of
requirements,
interesting still, I
and
think.
also consistent with what other large jurisdictions
A little
are
bit of
doing. I'm
sellers,
optimistic that we can do that fairly
hanging out
quickly.
overnight highs, value area low from yesterday.
We
Or
always
inside
wanted our
value area,
banks to be
technically.
competitive with European
Little
banks.
sweep to
I'm just
820,
curious,
come back in.
the original proposal
Rotate 880s.
that was in front of
Looks
you,
pretty
and
nice.
I'd like your
Let's quickly run through some dad jokes, huh? I got 3 of them for you. Maybe we'll get some volatility out of it. You never know. All right. We'll listen to that in a second. This weekend's dad joke, February 8th and 9th. What do you call a white bucket? Pale. All right. Yesterday, February 10th. Why was the strawberry late? Why was the strawberry late? He was caught in a jam. I like that one. That one's pretty good, to be honest. Tuesday, today, February 11th. I went to the zoo and saw a piece of toast in a cage. The sign said bred in captivity. God. Why am I laughing?
All of these decisions are made about, is this an appropriate order? Is this payee on the don't pay list and all those things? Once
sellers?
all of that is set,
confirm for me today. Is the system safe today?
I believe it is, and I will tell you, we are very strongly committed to the integrity,
sellers?
efficacy, resilience, and all those things of this system. And people do depend on this in a big way, and we're committed to that.
One last question
Missed
for you,
Phil
sir.
by 4 points.
The
4.5
failure of
points.
Silicon Valley Bank, and the chairman brought this up. I'm just curious, recognizing a lot of banks out there looked at this. It cost the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired, but you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
In a lot of ways, it's been revised. Yes, I can go into some details. We're one thing that didn't happen was, for example, the supervisors didn't follow through aggressively enough on things that they'd said. If they'd done that could well have been enough to to stop it. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio of long-term securities matched up with an unstable funding base. And somehow people wrote about that, and not the Fed, but others wrote publicly about this, but somehow we don't expect bank runs outside of a crisis in this country, and that's what that was. It was a bank run, and bank runs are incredibly damaging. I think everyone learned a lot from that and is determined to do better. That's
And
right.
so when we're talking about collaborating with the CFPB for financial technology firms, what would the Fed Reserve now do that if the CFPB, if the hypothetical is the CFPB no longer exists, what would be the Fed's role right now with respect to technology firms?
We don't have jurisdiction over, we have jurisdiction over banks and some
And
financial
that's
market
it.
utilities.
So let me ask you this, because I know there's a number of Nevadans who file consumer reports
I mean,
of concerns
honestly, fair
about
question.
fraud and predators with the CFPB. The Fed Reserve doesn't receive those reports, correct?
No, I don't believe
And
so.
you have no role when it comes to consumer protection like the CFPB does, correct?
Unless you're a Fed member bank that has 10 billion or less in assets, then we have jurisdiction.
Right.
On a
So there
consumer.
is a gap. If the hypothetical is true and what we're hearing that the CFPB is being shut down, there is a gap, what we're hearing in enforcement out there, and particularly when it comes to consumer protection. Is that, would you say that's true?
Yes, for all banks that we don't
Yeah.
supervise.
And I think that's the concern we're all having right now.
I'm taking that order off. It's not getting
is
filled.
this concern of when we're looking to streamline government. And listen, I'll be the first to tell you, there's a lot of bloat. We need to streamline it. We need to address regulations and overreach. But there's a strategic way to do it, and not this burn down the house that is going to harm people across the country, including in my state, those Nevadans that are looking for some sort of enforcement around consumer protection law. So that's what you're hearing from many of us on our side of the aisle here.
Can I just very briefly add that we do have some residual enforcement authorities, but what we don't have is examination authority, and for the banks that the CFPB supervises.
Thank you.
Honestly,
let me
that
ask you
she
this,
like
and,
at least was
you know, we
very
talked about
elegant
this
in
over
her
time,
way
and
of
I
saying it without
understand,
just like throwing fire at
It
him.
may be difficult to.
That was like the best question I've ever heard on one of those things.
Thank you, Mr. Chairman.
From a
Thank you, Mr.
non-political
Chairman,
bias.
for being here. Said that you are knuckling under
Oh, Kennedy's back, ladies and
the big
gentlemen.
bank lobbyists. Is
Let's
that
go.
No,
true? Do you recall a year or two ago when inflation was raging? I think its peak was about 9%. Many economists and other experts
Are you comfortable not having position?
said
Absolutely.
that you were going to have to provoke high unemployment, put our country into recession in order to get inflation down. Do you recall that?
Do you recall?
very, very well.
Are
This-
we in a recession?
We are not.
Would you, as an American, trade places right now with Germany in terms of the economy?
No, I sure wouldn't.
How about France?
No, thanks.
No thanks.
Things aren't perfect. Inflation's obviously still sticky.
God.
And long rates are too high, which I want to talk about in a second. The fact is, knock on wood, we have experienced a soft landing, haven't we?
Not for me to say, really. I'll let others
Well, have
make
we
that.
experienced a hard landing?
No, we sure
Are
haven't.
we in a
Bro said,
recession?
Jesus, who is this old man? You'll know in a
Call that a
second.
soft landing.
We'll recap some of his famous words in a second.
And it seems to me that you and some of the ladies and gentlemen who are your colleagues at the Federal Reserve behind you deserve some credit for that.
Thank you.
I don't know why you don't take the credit. Everybody else in Washington, D.C. does. And I wanted to thank you and your colleagues for that effort. You sure didn't get any help from Congress and on the and our president on the fiscal side. I don't expect you to comment on that.
All right, one of the funniest moments of all time on this stream was during a testification, very similar to one that you're watching right now, when Kennedy, the guy that we just listened to, read a transcript to Powell. And I don't even remember the context of the transcript. I just remember the content of the transcript. That was absolutely insane. I'm going to see if I can find it, or maybe someone else can find it and tag me in Discord and let me know that it's in Discord. Absolutely hilarious. Worth a rewatch, honestly. He was dropping the F-bomb in here and stuff, and it was, he's always on another level. You can just see from the title of this what he said. I'd blank you right here.
An increase in inflation by nearly 1%, economic growth, depression, and, for example, the increase to the average car price by $2,700. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental.
That'd be crazy, right?
To the housing market.
That's really a question for you. You know, I mean, putting them back in the private, putting housing finance back in the private sector has some appeal over the longer run, but I leave that with you.
Thank you, Mr. Chairman, very much. Appreciate it.
I want to address, again, something that the ranking member started talking off about, which was characterizing the CFPB as being the cop on the beat here. But I can tell you, as having been a governor and having a Department of Banking that reported to me, that if any consumer would contact us and make a complaint about a bank, even a big bank like JP Morgan, we would investigate, as could the OCC, the FDIC, the FTC. So to characterize that nobody's out there looking for consumers, I think is inaccurate. And we ought not to try and scare consumers right now that somehow this is the case, because if you do have an issue, if you're a consumer, please reach out to your State Department of Banking, because those folks are going to look out for you. I can tell you that because I used to have one of those Department of Bankings. They did a fantastic job of looking out for the consumers.
Missed it by
So what kind of
point
pace
and a
can
half.
we expect? And I know that obviously there's going to be a lot of factors like what happens to the economy over the course of next year. But if things were going to go along the way they are today, you've already said the economy's doing well. Inflation's a little higher than we want it to be at 2.6%, but unemployment's at 4%. If these commissions, and I think you used the word stable quite a bit, if these conditions were to remain stable throughout the course of the year, would you have a range that you could give us of where the balance sheet might be if we were talking again here in January 2026?
We basically we're going to be looking at reserve conditions in reserve markets, and trying to stop a little bit above
Long off
what we
IBH.
consider ample. And we think we're meaningfully above that now. We can't put a number on it because you can't directly know the demand for reserves
39 is
other
fair
than by
game.
observing behavior in the market and then putting a little bit of a buffer on it. So I can't give you an exact number, but for now it's ongoing, and we have a ways to go.
What kind of conditions would have to happen for you to start going back to quantitative easing?
So go to quantitative easing. That's a tool we tend to use when we're at the effective lower bound and we can't cut interest rates anymore. So nothing like
A little
what
bit
you're
of
seeing
sellers coming into yesterday's value or
It's
low
a
and
different
overnight
test for
highs.
stopping quantitative tightening, but we would use QE going forward.
Currently
only,
bouncing, current
only in a
value area
situation
high.
where rates are at zero, and we're a long way from zero now.
So that you think that, again, just generally speaking then, if things were to remain stable, you'll continue to unwind the balance sheet, you'll continue the quantitative tightening. Can't give me a range on this? Is that what I hear you saying?
That's right. That's right.
Okay, great. Well, I encourage you to keep doing that because, again, I think that's important to be able to make sure that you've got powder for the next issue that we may face. So thank you very much, Mr. Chairman. Appreciate you being here.
Senator Warner.
Got a wick dust.
Thank you,
just
Mr.
popped
Chairman.
up right at
Chairman
my
Powell,
exit
good
as well.
to see you. One of the things we've talked about in the past, and I've got 2 or 3 issues I want to get through fairly quickly, is that that while our regulatory framework should always promote financial innovation, that innovation can't come at the expense of things like anti-money laundering, consumer protection, financial stability. I continue to worry in many of these hearings where we keep seeing this regulatory creep outside the boundaries of traditional financial regulation. I think if we were starting a system from scratch, few of us would design it this way. But it is one of the reasons why I'm looking forward to working with Chair Scott and and my colleague, Senator Lummis, on a framework at looking at stablecoins in particular within the regulatory perimeter. I know my friend Bill Haggerty just introduced a bill in this area. I'm looking at trying to make sure we get those guardrails put in place, and how it touches the Fed is something that's terribly important to me. I know you and I have talked in the past about the notional idea of same activity, same regulation in the non-bank sector.
I'm gonna stop out there.
If you'd like to wax
It's down
briefly,
10 points and some change.
on this
Terrible.
question
Kind of bad
around
slippage
stablecoins
there.
and how we
Let me pause this. It's kind of bad slippage there. Couldn't crack back above IBH. I stand by the exit off of the prior sweep of the low. We got a wick test that's gonna fire, or did fire off here, up at 56 or so. But honestly, I probably am gonna call it here for 10 points down. It's 10 o'clock. It's about that time of day where I need to start moving my legs around a little bit.